Well, I am so glad that you are with us today. This could actually be something that you may never see in your lifetime. Let's look at our markets here. It's just really weird the way this is setting up. Let's look at corn, and we'll take a look at this together. And I'll try and make some sense out of this if we can. We're still trying to decipher everything. This sets up a very unusual situation. We have May corn, which is in delivery right now. That means the limits don't apply when it's in delivery mode. So May can move beyond the 25-cent limit, and it has. We're 28 3/4 higher. We're at 7.30 3/4, got as high as 7.31. So, I mean, if it wants to go $1 higher, it can today. Not saying it will, but anyway, remember, there's that squeeze thing that they're talking about in the May corn. However, you have July 24.5 cents higher at 672.5, and new crop, new crop December is a dime higher at 556.25. So with July within a penny of going, now it is tied to the limit. If it would close 25 cents higher, then it raises the question, does that mean we go into expanded limit mode? And remember, they're changing the expanded limit rules Sunday night. It doesn't go to 40 on expanded limits. On Sunday night, everything changes to 60 cents for expanded limits. On corn, it may leapfrog right over the 40-cent mark. I want to welcome in Brian Hoops of Midwest Market Solutions and try and sort this all out. We were actually reading through the rule book a little bit ago, Brian, and technically, I think it says you have to have 2 of the 5 non-spot months in corn that close limit up in order to trigger the expanded limits. That would exclude May, would it not?
Right. Yeah. May has no trading limits, as you explained, during the delivery period. So it would exclude that month. You'd be looking at, at July for direction in here. And we've almost touched the limit up in the July contract. And of course, we're being led by old crop futures here, tight basis levels, no deliveries. There was a hope anyway that the commercials would get some deliverable receipts through the delivery process. And it didn't include any corn. There was 66 of soybeans put out, bigger oil futures than expected, but oil's shrugging that off. You know, we've touched limit up in the July contract there, and can overcome some early session weakness to really see a strong rally develop here into the mid-session, and hopefully we can close with very strong gains as well.
Oh boy, this is, it almost takes your breath away sometimes how fast these are moving this week. Now you have the July soybeans, 21 1/4 higher at 1523.5. Now the nearby May, that's also in delivery, like Brian just mentioned, it's 20.5 higher. New crop November soybeans up 14 3/4. It's at 1333.5. Keep in mind, it was lower when we started the day today. Crazy whipsaw action, and it's very unusual to see this happening at the end of a marketing month like this, when a lot of times you see profit taking. Let's look at the wheat market right now. In Chicago, you have July 2 1/4 higher at 731.25 when it was as low as 717 per bushel. On the Kansas City market, we were lower just about all day long, and now you have July trading 5 3/4 higher. It's back up above $7. We're at $7.25. In the Minneapolis market, this is the one that has kept its head above water all day long. In July now, 16.5 higher at 761 per bushel, almost on the high of the day. Wow, that is a lot of market action to keep in mind here. Now, if you look at the cotton market, here you have July now trading 177 points higher. We're at 88.31 cents per pound. And December up 149 points now, back up to 85.33. Brian, this next week, we're looking at not only expanded position limits, which have been in effect for a while, but now expanded price limits and expanded margins coming up next week. That is going to lead to all kinds of volatility, is it not?
Yeah, if you didn't think we had much volatility already yet this month or even this week, we're going to probably see more of it when we go into the month of May. We're going to see big price swings. As you mentioned, a lot of factors coming into play in here. The CME is raising margin limits for soybeans as of close today to about $4,000, and so there'll be some fund rebalancing of their portfolios. Usually they have money allocated towards trading a certain commodity. They can't exceed that, so that means they'll limit some of the positions that they can put in place. and that will contribute to what we see next week. Now, weather-wise, that's going to be another factor, and it looks fairly decent for most of the main growing areas, winter wheat plains areas across Iowa, Illinois, getting some decent rains. But what is really dry and what's really is not being talked about enough probably is those spring milling wheat growing areas in a drought-like condition without much rain in the forecast.
Oh my goodness, that's going to be a hard game for anybody to stay a participant in as we get back next week. Brian, we'll take a look at livestock in just a moment. Don't go anywhere. We'll be right back. Well, now let's turn our focus, if you will, to the livestock trade. And we're going to go back to Brian Hoops. He's with Midwest Market Solutions and talk about all this. You know, at 11 o'clock Central Time, USDA came out with their new wholesale beef and pork trade report. And in the beef side, we had more sizable gains once again today. Choice cuts over 261. Well, they were 261 higher than what they were yesterday. And select cuts, $3.88 higher. They were priced at $283.67. Choice, $296.37. Wow, getting close to $300. On the pork side, they had big gains there all across the board. Carcass values up $4.10 at $111.65. Let's look at live cattle and see what the prices are doing right now. Well, with the big surge in corn today, I guess anything goes. Let's look at June here. We're 55 cents higher, believe it or not, at $116.60. August is up $1.42 at $118.82 in the feeders. How can they possibly go higher with the corn like it is? Well, they are lower. We have the May down $1.20, August down $1.77 now at $148.10, and it's currently on the low of the day. I guess that's understandable. If you look at the lean hog trade, you have the May up $1.07, and you have June and July now limit up, so that means they could be going into expanded limits on Monday. Let's go back to Brian. There's fireworks everywhere we look today, Brian.
Yeah, there's a lot of moving pieces today, that's for sure. April cattle went off the board here. They had some deliveries last night, kind of spooked some of the trades. They just dropped like a rock into their settlement price. And now June is kind of anchored towards where April went off the board, fearing that the cash market is going to be weak over the next several weeks. We're also seeing effects of the Goldman roll. Traders are selling out of their long June positions, buying August, October. That's why we're seeing so much spread activity between the June contract and the rest of the months. And of course, feeder cattle seeing the effects of higher corn prices on
right.
feeder cattle. And then when you look at the hogs, boy, we're just continuing to push higher into some contract highs.
Amazing times. And by the way, just not to leave it out, we have the Dow down over 200 points right now, too. Brian, thank you for the help. Brian Hoops of Midwest Market Solutions joining us. What a day. Tammy, back to you.